having gathered 31.29% this week. UACN and Axam and SAD are the next two companies on the list. And in terms of the top price decliners, we've got 7-Up, we've got Linkage Assurance, as well as Oando, that closed lower by 10.33% this week. Now let's take a look at what we've got on the NASD OTC. That is a smaller market in the Nigerian capital market. And the NASD OTC had a USI of 589.13%, 13 points this week, gaining 1.48% after the market capitalization came in at 398.68 billion naira. Volume traded there came lower by 80% to 762.824 shares, while it is valued at 25.05 million naira, and all that took place in just 38 deals. In terms of top trades, we've got Air Liquide and Friesland Campina Wamco, while just one bond was traded this week on the market, and it is valued at 1.5 billion naira. And quickly, let's take a look at what the FMDQ OTC produced this week. Yesterday, I beg your pardon, yesterday, the 22nd January 2026, as well as 13th February 2020, with 27th January 2022, are the major securities that attracted investors. Total deals is put at 9, and total value of all the exchange in the platform is 1.240 billion naira. But sentiments improved on the T-bills side of the market, where we've got the short-tenure bonds, short-tenure securities of 15th of June 2017, 29th of June 2017, as well as 22nd of June 2017, having more transactions from traders. Now, total deals came in at 740, but total value came in at 200.640 billion naira. Now, in recent times, as we've been saying, we've seen bullish sentiments across the Nigerian stock market as investors continue to find safe haven in the segments that segment of the market. The all-share index surged to a year-to-date of 16.73% in just a few sessions, with a total market value nearing 11 trillion naira. And to help us understand this sudden appreciation on stocks is the head of research at FSDH Securities, Jide Solanke. Really good to have you with us at this time, the very first edition of Capital Market in the month of June. Thanks a great deal for coming around. Let's take a look at what took place in the market in the month of May. Yes, it crossed 31,000 psychological line. Give us a sense of these factors, the drivers that moved stocks and possibly other securities that are quoted on the market up to this level.
Okay, just a quick correction. I'm not the head of research at the FSDH,
okay.
An investment research analyst. But I haven't said that appropriately. There's so many factors, and if you look at it from the context of how the market got to that long period of downward movement. Starting from 2014, from about 50,000 up to going low into 24,000, now going back to 30,000, as you call it, a psychological level. The market principally in 2014 began to fall because remember that 2013, 2014, we recorded significant growth in the equities market, and majorly because of the global liquidity. There was so much cash in the global environment, and that global cash was coming from the monetary policy action of the major central banks, particularly the Federal Reserve of the United States, the European Central Bank, the Bank of Japan, the Bank of England, because they were trying to correct the economy after that, very terrible time that happened. And once these economies those central banks began to roll back the monetary policy in terms of their quantitative easing, in particular the United States of America, when they began to roll back that cheap money that was awash in the global environment that found themselves in the Nigerian economy. When they started that around October 2014, we began to see, a situation whereby significant withdrawals of funds was happening in the Nigerian equities market. So putting that into perspective, again, let me establish that the long-term growth of the Nigerian equities market or any equities market is stability in the exchange rate. And once the stability in the exchange rate can be established, now and look into the future, you can understand, why we're seeing a resurgence and we're seeing more inflows coming both from international investors, foreign investors, and local investors. So this current movement in equity prices and in the broad index, which is the all-share index, there are about 4 major factors contributing to it, and that is situated within the context of the macroeconomic environment, because the factors that impacted the equity market in 2015 and 2016 were not primarily concerning the operations and management of those companies in terms of the competence of the management to understand the environment under which they're operating within the context of the companies and be able to develop management tools and management decisions to improve their businesses and improve the profit and improve dividend to shareholders. But the equities market, the stocks quoted on the floor of the equities market were impacted from macroeconomic forces that were beyond the control of the managers of these companies, forces coming from exchange rate instability, constant devaluation, depreciation of the naira, spiraling, skyrocketing inflation rate, and other malice that the economy faced. And these companies had to operate within that tough environment, and having established that. So these 4 factors are basically one, the increasing stability in the foreign exchange rate from the OPEC and non-OPEC action, which has increased the scenario reserve position of the federal government. Of course, given the fact that our exchange rate determination in Nigeria is consequent upon SNR reserve position, and SNR reserves position grows, ultimately the federal government, which supplies about 80% of foreign exchange, has the capacity to defend the value of the naira. So we've seen that began to grow since about October 2016 till date. Second point is that there's a pension rule going on that says that the pension fund having close to 7 trillion assets under management must invest a certain part of the funds with them in the equity market with the December deadline. So we see significant return of institutional investors in terms of pension fund administrators bringing pension money to the equity market, further taking advantage of the situation. Now, a corollary of the stability in the foreign exchange rate is that of the naira to the dollar, is that we've seen a significant return. Sorry, not significant based on historical value, but we've seen a return of investors back from the foreign exchange, from the foreign environment into the Nigerian economy.
So the monetary authority has really been able to help us shape the markets this time. That's what it means.
Yes.
Okay, Jide, let's quickly go on a break, and when we come back, we'll be talking about other impacts that we've seen on the equities market and how we actually arrived at all of that. Don't go away, we'll be right back shortly.